again, going on to game planning, there's three key parts to every game plan. It's going to be your entry, it's going to be your stop, and it's going to be your target. So in this, using this McDonald's example, the entry was 272. That was part one. That's what we want to buy. Part two is going to be our stop, where we want to get out more wrong. That our stop was 268, and that's going to be $4 risk. And now from that, we're risking $4. We want to strive for 5-1. And that would make our target about 292. So our target for 5-1 on this trade is about up here in this area. So still a little bit of ways to go. But now that we've systematically raised the stop as the swing has progressed, now at least if this trade does fail and doesn't reach 292 and it decides to roll over, at least we'll make $8 or $9 per share that we have in the name. So again, the three key aspects of every game plan is going to be your entry. From there, you want to then define where your stop is. Between, you take whatever the pressure buying minus your stop, that's your risk per share that you're going to invest. And then from there, if it's you're risking $1, you want to aim to make $5. If you're risking $2, you want to aim to make $10. And that's where you can determine your target. Now, your target is not going to be set in stone. It's not going to, in this trade, if tomorrow this thing rolls over, it's not to say that we have to only sell to 290, but you want to have that idea in mind so you can aim to have the proper score in these trades. So you're not randomly just selling the stock when it trades up 2 days in a row. You want to have things in place to make it much more systematic and put the risk reward in your favor. So with their game plan, it's your entry. Number 2 is going to be your stop. Number 3 is your target. And you determine the target based off the risk that you're taking in that trade. And this is something that you're going to do with every single trade you put on. And you do this before you put the trade on. Will help you avoid a lot of the emotional decision making that happens with individuals who don't game plan before the trade. When we talk with a lot of new traders, 9 times out of 10 when they're in a stock, it's always what's your game plan, and they first off don't know what it is, or they're forming it after they're in the position and typically the stock is already below their entry price. And now it's emotional decision making of how they can get their money back. And this is why we want to make sure that the game plan is put in before the order is placed. You want to have it written down on pen and paper, on your phone, wherever you can write it down, write the full game plan down, entry, stop, and target. And even for us with using TradingView, we have a lot of these things marked out. So it makes it easier and you can set reminders. So with these trend lines, you can set an alert here and you could put, take profits. And then when the stock does reach that 5-1 target, you'll get that reminder. It'll pop up and it'll remind you to take some profits.